Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And right now, everybody's eyes is on Tesla. It always has been. It's one of the most number one high volume traded, most watched stock out there. Constantly getting great publicity. Not, I mean, Wall Street can't stand him. They're just not. He's not into the swamp. And that's why I like it so much. He's my country rebel, and we're going to go ahead and talk about Tesla. I'm going to introduce my 3-day trading rule after earnings. I always like to wait, especially if the news ain't that great. They love the website, the Model 3. You got the Model Y, which is the number one selling car in the world. And I always looked at Tesla and the EV market as a prestigious thing to have, something to put on your watch, no, not your watch list, but your bucket list. If you have money, and I'm going to repeat that again, if you have money to spare, because it's something that you can drive around in town with and stick it in your garage, charge it up, and then you're on your way to work the next day. Now on the highway, I have different thoughts about that. I don't think it was meant for the highway driving because of just the hassle of having to charge this thing up, instead of just going to the gas station and pumping a little bit of gas in there and moving on. So yeah, once the government gets involved in things, it seems like it always screws it up. And that's another reason why I think that we're going to have issues in the future with the EV car sector. Now, has everybody that's prestigious got their little diamond ring, something that they can hang on their necklace, and that's the EV car? I think it is. I've come to that conclusion about 4 months ago, and that's what I've been thinking. Then Elon Musk comes out and says that his guidance will be lower in the year of 2024. I think it is too, with the height of inflation. You know, it's bad enough for people to have to go out and pay 30% more on food, and used cars are up 30 or 40%. New cars are up humongous price. I mean, it's just destroying the car industry, what the government has done here in the past 2 to 3 years. Once they get involved, it's just no good. You need the private sector to figure this out instead of being forced what to drive. But that's my opinion. So we're going to go ahead and look at the news. You know, I pull up the news and all I can see is the negative headline of the guidance 2020. You know, right here, Tesla stock plunges as EV maker warns production growth will be notably lower. Now, if you look at all the other EV companies out there, they took a humongous hit. But the only one that will get the most attention is Tesla. That's why, because they're number one. He's the Einstein and the Benjamin Franklin when it comes to the EV car. And it's just not a car company, it's a tech company. A lot of fat cats get that mixed up. We ain't seen nothing yet, as long as he keeps putting out good stuff. So that's Elon. Tesla stock falls after warning of weaker 2024 guidance. Exclusive: Tesla plans to build a new electric vehicle in 2025. That's great news. They need something that's different, maybe a little bit sportier, small compact car that you can bring them prices down. Note, as he brings the prices down, Wall Street doesn't like that. They don't like that. They like that high margin. The cost to build the cost to build, the extra cost like employees and stuff, it only costs $1,000 to put this thing together, and that's remarkable. It's cheap, inexpensive, and it's just part of why he can bring these costs down. Tesla shares closed down 12% after automaker warns slowdown. I think it's expected, so maybe we can consolidate at a good price. Tesla shares plunge, wipes out $80 billion in market value. Tesla stock hasn't fallen enough. This analyst sees a further 30% downside, and I'll show you where that target is on 2 charts. So I'm definitely bullish on this stock. I haven't traded it since earnings. I traded it pre-market earnings and got screwed on that trade. I mean, I lost $340 some dollars, but I went small. I just got one contract. That was my bad. So let's go ahead and look at the charts. This is my 3-day rule. I like to wait 3 days and see how a stock reacts to bad earnings or bad guidance or whatever, and then I'll go ahead and start really looking at it, see if a pattern's been formed. We did have a long snake, we did break out, and we did pull back. And the next step is a boom. Now, with the guidance and the sediment, the bears will eat this up. I've been trading this thing every day ever since the IPO came out, and I've had to deal with the negativity. First it was, I'm not driving an electric car, it's gas combustion engines all I'm going to drive. And I dealt with that, and they had to have a makeover, and finally some of them have gone through and have a different opinion about it now. I don't hear about the combustion engine, all I hear about how bad Elon Musk is. So this is the 3-day rule. I've got using 2 different moving averages on this here chart. I've been watching Schwab. And this one guy on there, he's the chartist artist, and he uses these 2 moving averages. And so I decided to start using them too. What I have here is the 21 EMA and the 63 EMA. I'll use that 21 as a pivot point, and I'll use the 63 as a resistance and a very strong support level. Right now, we are under that 21 EMA, and we need to pop above it. If we pop above that, what I'm thinking, I've only been studying these for about a couple weeks. I've been using the 21 SMA. So if we pop above the 21 EMA, I think we can run this thing up to that 63 EMA, because we've hit it before, we've hit it before, we've hit it before, and we've hit it before in these last 10 days. So I think we can run up, break that 21 EMA, and hit that 63 EMA. If not, we'll go to different levels. Now I like to use the standard deviation chart on this here stock, and we're going to pull that up right now. This is your standard deviation. We got deviation 1 and deviation 2, with the middle being the pivot point of this chart. Now we did pull back to a head and shoulders. I call this the inverse head and shoulders pattern, and that is a solid support. I did call that 181.32 before we had the knife, and we came back and we hit that spot. So we consolidated off that 181.32. Now if this thing decides to pull on back more, the next standard deviation will be down here where we hit it once before, and that's going to be right around the 140 area, 141. So I'm going to put a price line in here to where I think it's going to go ahead and fall. And I'm going to mark it right on that deviation channel, just a little bit above it, so I can get in early. Right around 143.63. So if we do not hold that 181.32 and we don't bounce up to that 193 area, which is maybe the part of that head and shoulders. Now this is on the weekly time frame, and I'm going to call that my low support, right around the 138, the 143 area, somewhere in that channel. It can drop back down to 100 and be a very strong buy. Now, I've always been bullish on this stock, but I've always been smart about trading it. It has been a little bit more difficult to trade in the last couple of years because of the way the market is. We've had a lot of volatility, and right now we have a lot of irrational exuberance. We're at extreme greed levels, and I really believe that. I've been trading this market 20 years every day, and I have not ever seen the market react like this when we've had such high inflation. So I've never dealt with that high inflation before. I do not believe what we're hearing from the feds, that inflation is down, because everywhere I go, things are still expensive, very expensive. Interest rates are still high. So I'm not falling for it. I don't think this economy is as great shape as they say it is, but that's just my opinion. So let me repeat what I said. We need to hold that 181.32. If not, I think we could have a nice substantial drop. I'll still be looking at this to day trade the snake. I just haven't touched it since earnings come out. I wanted to wait for Monday and see what kind of reaction we have, and maybe I'll use it as a scalping trade right now or a day trade, but I'm not going to be investing in this thing until I start hearing good things coming from Elon. Now, I listened to Elon a couple weeks ago, and he talked about shouldn't be trading this stock anyway unless you're using the weekly time frame. And I took his advice on that, and I'm glad I did. So the support level again, 143.63, a little bit lower, 138, with a first support at 181.32, with a resistance level to break, and it's going to be that 63. EMA, if we break that 21 EMA. I'm really excited to watch, see how these moving averages work. I'm still sticking with my previous moving averages. And when the 9 crosses the 21 SMA, we'll have a good run on up to that 193 area, which is now the 50 SMA on the 1 hour time frame. This is the TTM trend chart that I use. And I use a couple extras. I got the black dot and I've got the pro. And I use all kinds of charts. Like I said, I've got so many different trading strategies, it's beyond belief. Been doing this for 20 years. So I just got strategy after strategy after strategy after strategy after strategy that I've saved and used in the past 20 some years. I like to keep it simple and I like to keep it clean. I've been scalping the SPY and the SPX practically on a daily basis, and I'm winning almost every time. Last week was a tough week. I got stuck twice in the SPX. Last Friday I was down 1,300 and it bounced back up. I made 600, and then the other day before that I was down 750 and it bounced back up, and I was able to get out with a small little profit. So I really like trading the SPX and the SPY because they chart out real nice and are easy to read, and the volume's always there, and I'm a volume price trader, volume action, and that's the way it is. So 3-day rule is I wait 3 days after earnings, and then I decide if I want to take the trade. If we formed a pattern out of the snake is a downward trend. Once we break out of that channel, just like this, once we break out of that channel, it catches my attention, and then I determine what kind of pattern we're starting to form. And that's it. Retail traders, keep a good eye on Tesla. 3-day rule come Monday. We're going to see how it reacts. I think it needs to hold that 181 area. If not, we'll start to pull back. If we do start to run for a scalp and a day trade, I'm not swinging it. Not yet. Not yet. Not yet. I like to see it go a little bit lower before I start jumping in for that. Guidance. Guidance is very important to a stock, but also is honesty. And when Elon comes out and says, I believe it too. I've been saying it. I said all these other NIO and XPEV and LI, I mean all these Nikola, listed, they've all pulled back hugely. So more than what Tesla has. Tesla's number one in my book. And that's the one I'll be watching. This is the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. Have a great trading week. Babba yabba doo.